The economic engine is all about the consumer. Americans must buy stuff, lots of stuff. Without ever increasing expansion of debt on all levels, there is no possible way the economy can be recovered. People need to be working because they need the disposable income to spend. If the employment situation is not optimal, the economy will suffer. It's a simple equation. That's why there is such an argument over the government stimulus. They know exactly what the economy needs. You came here for the truth, so let me unveil that for you. Today we are going to talk about the global systemically important banks. We are going to talk about the economic situation with the jobs. I'm going to show you some data that I believe is really important. It is critical. Stick with me. Let's begin. Here we have the global systemically important banks. You know them. They were the reason why the entire world was on the edge of their seat in 2007 into 2008. And we know what happened from then on. It was a terrible situation, of course, because we learned about how interconnected these companies are. All of them, which I'll show you in just a second on this list, have been using maximum leverage. And that is totally fine when the economy is growing, when the stocks are moving up, and when everything is unicorns and rainbows. However, we run into some problems when things go a little haywire. Right now, you could see the global systemically important banks stock index, and it has been doing very poorly despite looking at, for instance, with the Amazon stock or other tech stocks that has gone nothing but up during this period. So we have to be very careful. We have to keep our eyes peeled on what's happening with the financial stocks and how that will impact others in a ripple effect. This is the list right here. I'm not going to break it all down for you, but I just wanted to show you the global systemically important banks, price to book ratios, market cap to total assets, and market leverage. This is ranked in order of the leverage. At the top, SocGen, Deutsche Bank, and all of the other names that you are used to seeing. All the big boys are here, and you could see how excessive their leverage is, the amount of money that is going into it, and then you leverage on top of that. It's unbelievable. You have to understand the derivatives that are connecting this system. That's what it's all about. Today, people are saying that real estate prices will never go down, but they said the same thing back in 2007 and even into 2008. They were telling us that this is a subprime crisis that is only relevant to the United States. It is very small. It cannot get worse. And then things started to unravel, not just because of how excessive the prices have grown in a period of time. That doesn't matter. As long as there's somebody who's willing to pay a price for that, there is going to be a higher price in the future. That's the way this works, not just for stocks, not just for real estate, but for anything. If somebody's willing to pay for it, that's what it's worth. However, when we looked at the derivatives and how that was unraveling, oh my goodness, it was terrible. Today, we have something very unusual, and it's going on with the commercial mortgage-backed securities, and that, of course, can spread into other categories, into other sectors, into other industries. And if more people would understand that, then they would have a different view of what's happening. There are just a couple points that I wanted to read from this, a good explanation for what's happening today. Never before have I seen a market so highly valued in the face of overwhelming uncertainty. Isn't that so true? Today, the market continues to go up, at least when you look at it on a whole, simply because that includes those top 5 stocks which have really performed well. But you can see how excessive it has become, and yet there are so many questions. That is an anomaly historically. Usually there would be some downward pressure, but every single day, for the most part, the stock market continues to rise. The US stock market looks increasingly like the hapless Wile E. Coyote running off the edge of a cliff in pursuit of the pesky roadrunner, but not yet realizing the ground beneath his feet had run out some time ago. I always think of this in the way that he's presenting it here also, because that seems like the way it is. Usually people take it too far and then we know the result. It is unfortunate for so many, but they only find out after the case. Voltaire observed, "Doubt is not a pleasant condition, but certainty is absurd." It's an interesting quote indeed. A flood of job losses looms as airline industry struggles. Every single day I'm coming across articles, new information, and data that is showing this industry is going to be hurt very bad. They initially took on the bailouts and said we will not lay anybody off. Then the government came in. Initially, they had stated that they were not going to lay anybody off as long as they got a bailout. Then a month or two had passed, and you started to see all these different companies tell their employees that unfortunately some people got to be kicked to the curb because we can't afford it. They took the bailout money and they're still going to lay people off. But the government stepped in and said, hang on, don't worry, we'll give you some more money. We are now at this point in which we wonder who's going to get the money, how much money they're going to get, and what's 2021 going to look like. Are they really going to be strung along for this period? Is there enough money to be pushed out to these employees, to these businesses? I really don't think that they're going to be able to just keep everybody on board in hopes that things will return to normal in the coming days, in the coming weeks. More than 75,000 US airline employees have been warned that their jobs are at risk. They got 25 billion previously. They are expecting 25 billion more. But what does that get them? 2 months? Depends how they split it up. Who knows? It's not enough. It's never going to be enough. Look at what's happening with real estate here. I wanted to point this out. This comes from a report out of Zillow. They had some good data in this, and I would highly recommend checking it out if you're interested. But this one really stood out to me. Inventory change from February 2020, and you see one big anomaly, and that is San Francisco. The amount of inventory that has been on the market right now has skyrocketed. We're comparing Boston, LA, Miami, San Fran, Seattle, and Washington, and you can see the difference here. People are looking to move out. They are trying to get away from what's happening, the high taxation, the problems that they're experiencing on many levels. This is something that is going to change. We are seeing this in so many different developments, so many different issues that have been happening here, and it is very apparent in places like San Francisco today. I thought this was interesting. Lumber prices go through the roof on high demand and short supply. So apparently, because of what's happening here, crisis 2020, where that wood goes through that supply chain, it was shut down for a period of time, and finally that has caught up. There are serious problems in this particular industry as it relates to those who need to buy that. However, take a look at this chart. That green line there is actually lumber futures. As they have been skyrocketing, we would expect that there is this huge demand. I see comments every day telling me that the economy is fantastic, the recovery is on, it is a V-shaped recovery, cheerlead all the way. But this is data coming directly from the Census Bureau, US construction spending, and you could see how it has continued to trend downward. That information, of course, is relevant. It is new. It's not the only thing we should be looking at, but comparing the two here, we've got ourselves a serious disparity. I thought this article was extremely important. You have to understand what's happening today on all levels, and I found this one to be integral to what we've been talking about here on the channel for quite some time. The U.S. Department of Agriculture has launched its own $3 billion effort to buy food from farmers and deliver it to food banks. So the way I look at this, number one, is that it's basically a bailout in a sense of these farmers. You've got some serious problems going on right now. People are not using the normal supply chain. Things are breaking down in a sense. The restaurant closures and so on. So we have the government going in, spending money to buy the food to then give it to the food banks. But the food banks have been seeing massive surge in usage. Does that mean that we have a V-shaped recovery? Is that where the V is? Is it really there in the food banks? No, come on, let's get serious for a second here. Obviously, you're going to have people who are taking advantage of the food banks, advantage of the PPP loans, advantage of all these different programs that are put in place. But you know that people are suffering today. I believe the last numbers that I saw, the non-seasonally adjusted numbers for continued claims in the United States, is at 28 million. How many people didn't even end up on that? I'm not even sure, but right now, that's the data. That's where it shows you that people are hurting. Millions and millions of people are hurting today. We see that in this data in particular. If you want to ignore it, that's fine. But I know that my subscribers on this channel just want to know what's really going on. And this is it. Switching gears here, we're looking at what's happening with the US dollar. Right now, there are so many people shorting the US dollar. In fact, it is at a level we have not seen, and this chart goes back all the way into the 90s. So right now, there are so many people piling into this trade, which tends to mean, at least in the short term, there will be a reversal. Nobody knows where it's going to be 3 months, 6 months, a year from now, but at least when we look at this in that shorter time frame, things could reverse. I'll keep an eye on it. I'll keep you posted. Novogratz said that the market was in a, quote, liquidity-driven frenzy fueled by stocks like Amazon and Tesla. However, there is potential that this could certainly change if there are higher corporate and capital gains taxes, as well as increased rates for the wealthy. Those frenzied bubbles normally end with a policy response. Usually it's the Fed's action, but action on raising taxes could end this froth. I mean, Amazon's an amazing company. They've been doing amazing, but it's trading at 100 times earnings on a gigantic multiple. Speaking of taxes, California wealth tax could become first of its kind in the US under a new proposal. We'll see what happens here, but I just wanted to connect the two of these together. There is increased taxation that is always being proposed. We don't know what's going to happen, but I find time and time again, people are moving their way out. They don't like what's happening in California. They don't like what's happening in New York. And I'm talking about the businesses. I'm talking about the wealthy. They are moving out. They are moving their businesses. The corporations suddenly have a headquarters in Puerto Rico. They suddenly move their business to Florida. This is what's happening because it's a lower tax environment and they want to preserve that capital for them, for their investors, shareholders, whatever it might be. Just wanted to give you an update on what's going on with China. The PBOC adds cash to ease liquidity stress with rate unchanged. So we have seen all the different central banks out there. They have been making the conditions easier and easier and easier. One central bank might do it in one way. Other central banks might do it in another. But ultimately, the trend is the same. Easy money for the foreseeable future. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn how to sell stuff online, if you want to understand e-commerce for free, you can do so at the AmazonGPS.com. If you want to understand money, how it works, the foundation, making money, everything is all in these 2 books. You can check them out at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. You've got to see this video. Really important. A lot of data was covered. Definitely check it out. I'll see you there.